Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. A start of a new week, Monday morning. We are coming to you as always from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. And might I add a very long week in that because we're going to be working on Saturday. The markets are open. There's some testing or something that's happening, right? And there's Reliance numbers also at the end of the week. So it's going to be a long haul this time around, but we've got everything covered and lots of news to track.
Well, that's right. And wishing all our viewers, happy Pongal, happy Makar Sankranti as well over the weekend. So the festivities continued. And Prashant, happy Pongal as well to you as well, I hope.
Thanks very much. Happy festivities to all of you and, of course, all our viewers as well. Down south who are watching us and actually everywhere. So it's essentially the start of
Happy Lori as well, sorry.
That's
That's important.
But did anyone try any of the kite flying yesterday? I did a little bit of it. I just can't get a grip on it. But it was fun, actually, for the kids and everything. So it's all the festivities begin.
I celebrated Lori. I, went and celebrated moving around the fire, wishing for, all you want.
Prosperity.
And, yeah, lovely.
All right, well, we'll circle back on that one, but let's just kick it off with markets as we always do, right? What you need to know as we begin another week. Now, for that, we have to start with where we left off, how we left things off on Friday, and we left things off in a very, very good shape. The Nifty, it was powered on Friday largely by the IT services index, but it's not just the IT services. The IT index was up 5% on Friday, on the back of earnings the previous day from Infosys and TCS, but it was also Reliance. Actually, the first 2 or 3 days last week were absolutely flat, nothing, right? And then starting Wednesday, Reliance started to show signs of life. We saw 2.5-3% kind of days. And then on Friday, the IT stocks kicked in big time. And that is largely the reason why here on the Nifty, we are now talking about, the index eyeing the 22,000 kind of levels. I'll come back to levels in a bit from now. But in terms of global cues, etc., there isn't very much at all. Very subdued kind of price action, price activity on Friday. Equities, bond yields, dollar. I'm not even going into levels because that's how flat they were in terms of the Friday session. The only thing is oil is back to, almost just actually 78.5, 79. In that range is where oil prices are at this point in time. So it's moved up a little bit. Now, today, you got the U.S. stock and bond markets, which will be closed on account of Martin Luther King Day. So when we come back tomorrow morning, you'll not have any U.S. action. So it'll be a bit of a vacuum, and we'll have to have a trade-off of our own momentum and, of course, what the rest of Asia and other markets are doing. Where does this leave us? It leaves us in actually a pretty decent kind of place. Near-term upside level for the Nifty basically is the 22,000 level, 22,000 to 22,250 levels. Basically, the second number, 22,250, is a projection based off the movement that we've had. Uptrend on the Nifty intact as long as the Nifty stays above the 20-day moving average, which stands at 21,560. Remember that we are coming off about 12 days of consolidation. And then the market broke out last Friday in a very significant kind of way. So, you will still need to watch out for markers on the downside. And the important marker to my mind is a 20-day, which is 21,560. As long as we are above it, I think things are good, and you actually will look ahead and look up. Now, the Nifty Bank retraced 61.8% of the recent fall. I'm talking about the very recent fall, last 5 days. And that number is 47,858. Friday's high was 47,858. And then we saw some selling pressure, which started to come in. So the Nifty Bank needs to take out that, but that is very, very near, close by. And of course, the recent high of 48,382, which is basically about 1,000 odd points away from where we left off. Once you do that, I think there are bright chances, bright possibilities of the Bank Nifty actually heading to a new high as well. The Nifty Bank has been the trouble spot. It's shown signs of life once in a while, but not really gone all the way. So I think we'll watch out for that one. On the way down, the recent low in the Nifty Bank, which is 47,011, should not be broken if we are to see, levels on the upside. So 20-day on the Nifty Bank and the recent low on the Nifty Bank, I think the two levels that you need to watch as we kick off things here once again. we're coming off a very strong momentum on Friday. Watch out for what led this move up, which is, of course, Reliance Industries and IT services. TCS and Wipro powered the rally, at least sparked the rally Thursday after markets. And, of course, we have HCL Tech and Wipro. Lots of upgrades, big price movement, especially on Wipro on the ADR in the New York sort of market on Friday. Will we follow through with some of that once again this morning is the question. The GIFT Nifty is indicating almost a 100-point up move. Sonia.
Absolutely. And, you said the word momentum. I think that's what this market is really, seeing a lot of in the last many days. Record highs and the momentum is pretty much intact. It's all roads leading to 22,000 on the Nifty, right? Looks like the market is going to get there sooner rather than later. Remember, the Nifty is now up 16% from the lows that we saw on the 26th of October last year. And a lot of, ground has been covered. Now, there was large buying from domestic institutions on Friday as well. DI has bought almost 3,000 crores in the cash markets. So big money coming in. And this morning, tech stocks are once again going to be in focus. You had 3 out of 4 tech stocks beating street estimates, whether it's TCS, whether it's HCL Tech, Wipro, and of course, HCL Tech beat both on revenue as well as on the margin front. Dollar revenue growth of almost 6% for HCL Tech. The street is definitely going to like that. And Wipro was not as bad as what the street was estimating. So the expectations were muted and Wipro beat that. So there could be some more buying interest there. Some of these capital market stocks could also be in focus. Remember, last week, HDFC AMC reported very strong numbers. Anand Rathi Wealth's numbers were very good. And this week, you have the likes of ICICI Securities as well as Angel One that will be reporting numbers. So keep an eye out on them. A lot of these depositories, some of the exchanges like BSE, MCX could also report a good set of numbers. So that's a pocket that I'm looking at. It's an important week of earnings. We cap it off with Reliance and HUL on Friday. And then, of course, we have a trading session on Saturday as well, so keep that in mind. And some of these momentum-based volatile stocks like Polycab will be reporting their earnings. That happens on Thursday, so keep an eye out on that. And today, a lot of positive news flow coming in, whether it's Tata Consumers acquisitions, whether it's BHEL's large order, whether it is, a couple of other names like D-Mart that had better than expected numbers. So there's lots of traction in individual names, and we'll keep tracking that for you. But overall, momentum is pretty much intact.
Well, it was a good close to last week as well, Sonia. Friday ended well, and today the GIFT Nifty is suggesting we're going to open up well in the green, which is telling you that the Nifty will test closer around the 22,000 odd mark. And the picture is looking very good because both the pillars of the market, they did well in Friday's trading session. So the Nifty Bank is seeing a relative underperformance. Now, we go on talking about both these two pillars, that's the IT as well as the Nifty Bank. But Reliance Industries, which is as good as an index itself, well, that was the big driver in the last week. And that picture tells you the story. Last 7 days, Reliance Industries up more than 6%. You have the Nifty that's up closer on 1.8%. So that's been the one that's been driving the Nifty higher. But for the Nifty to hold above the 22,000 odd mark, you'll need support coming in from the Nifty Bank. And that's very close to the 20 DMA. It's only around 150, 160 points away from current levels. So you wanted to get past that near-term technical resistance and then fly away to a fresh all-time high. So that's the number that I'm looking at. We're likely to start off above that level, but you want to hold above that level. So the 20 DMA is something that should be breached in this morning's trading session. What can help the Nifty Bank really, for the week itself is HDFC Bank that comes out with its set of numbers. And that could be one stock that could drive the Nifty higher as well. So we'll have to keep an eye out on that one. How are the FIs positioned on index futures? Well, you have 63% of their positions on the long side, 37% on the short side. So they're still net long. How did the options data shape up? Well, you had 2 strikes that were very active, and that was on the put side. In an uptrending market, you want to see put writing, and that's precisely what we saw. 21,700 put, 21,800 put, both of them were fairly active. And just punching in those levels, since there was writing being seen at that levels, you get a near-term support around 21,650 to around 21,725. I think we should get that number up for you on the screen as well. And since we're seeing so much of put writing, the PCR has moved up. Now the PCR is at around 1.4. Remember, normally where you see when the PCR moves to around 1.5, we see some bit of give back. So just want to put this on the table. The Nifty ended higher. The India VIX as well was high. So that as well is sometimes a sign of cautiousness. But Nifty has got the momentum. You have both the pillars of the market that did well on Friday. Today, for me, the Nifty Bank is crucial. Reliance Industries has been holding one end up as well. So it seems the Nifty is set for life above that 22,000 odd mark.
All right. Well, as you said, one of the biggest cues to watch out for will be HDFC Bank's numbers tomorrow. So all eyes will be on that. The first of the big private sector banks coming out with numbers. So, we're going to track that very closely. After good numbers from tech companies, let's see which way things go. But on the equities front, first up, we have Chetan Seth of Nomura, who thinks that the market still believes in the narrative of a US soft landing with disinflation and slowing but not collapsing economic growth, the dominant multi-month trends. He thinks this theme appeared to have supported both US bonds and stock prices this past week, even though Asia ex-Japan stocks struggled due to largely local factors.
Okay, let's get you some money market views as well. This is B. Prasanna of ICICI Bank, who says a softening US PPI, that is Producer Price Index, brought back early and faster rate cut pricing in front-end yields, which kept the dollar under pressure. He says the rupee gained while catching up on some of its underperformance against recent dollar weakness. He's expecting a strengthened rupee to persist, added by positive inflows on exporter hedging. However, he adds, the RBI will protect the currency from a sharp appreciation. He's expecting the rupee to trade between 82.6 to 83.1 to the dollar this week.
All right, and on the bonds, B. Prasanna says global bond yields inched lower as inflation print came in line and incremental supply witnessed robust demand. He said crude prices remained soft despite tensions in West Asia as global demand remained weak. Back home, he says yields soften on expectations of the government targeting aggressive fiscal consolidation next year and strong end investor demand. He says with India's CPI inflation also surprising on the lower side, he expects the positive bias to continue with the 10-year benchmark bond yield trading in a range of 7.1 to 7.2%.
All right, well, that's some opinion across asset classes. Arvind Sanger is managing partner at Geosphere Capital Management. He's joining us right now. Arvind, great to have you on the program. Thanks very much for your time. You know, it's always something, right? Almost a fortnight of a flattish, sideways kind of trade here in India. And then you have Reliance, which kicks in. And then, of course, IT services. But I just want to start with IT services. I don't know if you managed to see any of the results. But, you know, it's not as if numbers have suddenly started to show great signs of enthusiasm or anything. It was just that third quarter is seasonally weak and numbers were a little better. But growth is like 1% quarter-on-quarter constant currency. Between 1 and 2.5%, right? So it's nothing very large, but stocks reacted in a very outsized way on Friday. What are your thoughts there? IT to many is still a macro call, a US macro call. Your thoughts, Arvind?
Well, it's interesting. I was talking to a US IT services company CEO, and it was interesting. He was lamenting the fact that he is listed in the US because for the same growth, his multiple would be twice that if he were listed in India. So, you know, I think what you have is a much more euphoric valuation setup in Indian market for the same IT companies with similar growth drivers. So, I mean, I think there was absolutely nothing that you could take as a great positive when headcounts are reducing at both TCS and Infosys, but the market is just chasing after laggards. So, you know, this is a market that has got the bull between its teeth and it's not letting go. And I think we can always make up facts after the fact for why the stocks went up. But the reality is that, you know, I didn't see anything dramatic that would account for that strong move in IT last week.
Okay, got it. We have banks in focus this week, and HDFC Bank comes out with their numbers tomorrow. What is your expectation from the private sector banks this time around? And as an investor, would you put any fresh money to work here? Would you be cautious? What's your stance?
Well, I think on the banking sector, the main challenge is going to be if loan growth keeps exceeding, your deposit growth, then that acts as a long-term challenge to being able to sustain that growth. So, you know, I think the balance sheet problems are not there in terms of bad debt issue. It's more getting, deposit growth to match up. So I think we'll be looking for more signs and commentary from the companies as to how they're managing that loan to deposit ratio challenge, because that can get too far out of kilter. I think the banks have, a strong growth opportunity ahead of them from a loan growth demand standpoint, and the quality of the, growth that is coming. Although there's a little bit of a risk that RBI has raised risk weighting on unsecured loans, but at least on the secured side, things look good. But I think the main challenge is going to be on the deposit growth side. And so that's where we'd like to see a little more momentum.
Arvind, good morning. Arvind, the last week or so, you got some sound bites coming out of the Fed officials. And maybe, in fact, the street is pricing in too many rate cuts and maybe too fast. How do you read that, point number one? Point number two, the geopolitical space is getting a little uncomfortable, right? The markets have been ignoring it. But at some point of time, it's going to affect trade. It's going to affect economies as well.
Well, I mean, I think you're spot on because, one of the things that people are not commenting on is because of the tension in the Red Sea, because of the Houthis, you have seen a doubling of container shipping rates. The Shanghai Container Freight Index has more than doubled since late November. And again, if this is temporary, it's fine. But if the Red Sea remains a place of tension and shipping remains diverted for an extended period, that is going to start feeding into, in consumer inflation in the U.S. and elsewhere. Europe is actually even more hard hit. And if that happens, then the expectations that the Fed and the ECB and others are going to be cutting rates aggressively may get put on the back burner. And I think the markets have kind of gone all in into this assumption, although I guess there was a little bit of a pullback, at the start of January. But the markets are still relatively benignly focused on rate cuts by the Fed starting as early as March. And so I think, yes, that is definitely a thing to keep an eye on. But the good news is that oil, despite all these tensions, has remained well behaved. Yes, it's come off the bottom, but it's only at $78. It was, low 70s a few months, maybe a month ago, but it's only 78. It's not in the 80s and 90s and, 100. And that reflects the fact that there's a lot of spare capacity in Saudi Arabia and other OPEC countries, and therefore the market is not tight. So as long as oil remains well behaved and we don't get too much of a consumer inflation, maybe this Goldilocks scenario plays out and Fed is cutting rates by March. But I think that is one of the risk factors in this kind of benign assumption that liquidity is going to be rampant and everything is going to be hunky-dory in 2024.
All right, we'll leave it at that. Arvind, thanks a lot for joining in. We'll let you go and enjoy the rest of your week. Sip into a quick break on that note. On the other side of the break, our list of top 10 stocks with our entire research team is coming up in just minutes from now. Stay tuned. Welcome back. Lots of stocks in focus. HCL Tech first up, post numbers. Reema is here to tell us how the numbers look this time. Reema, good morning.
Hi, good morning. So it's a big beat on revenues and margins for HCL Tech. The company has reported a top-line growth of 5.9% in dollar terms. Sequential revenue growth in constant currency terms is a growth of 6%. Estimates were for a 4% growth. Margins have expanded by 130 basis points to 19.7%, again, ahead of what the street was anticipating. And revenue growth for HCL Tech has come in ahead of the pack. So at a time when most of the IT companies have reported a muted top-line growth, HCL Tech's top-line growth of 6% stands out. The company has also narrowed its revenue guidance band for the full year, but that comes in line with street expectations.
All right, and you can catch the management at 9:30 a.m. today on Bazaar later on the show. But Reema, tell us about Wipro as well.
So Wipro, to start, let me tell you, the ADR was up 17% on NYSE on Friday. Wipro has beaten muted expectations. The company's top line has fallen by 1.7%. This marks the fourth consecutive quarter of a revenue decline. But the revenue decline was not as steep as what the street was anticipating. Even on the margin front, despite a wage hike impact, they've managed to maintain margins at 16%, beating street expectations. Two key takeaways, from the internals of the numbers. One, they have a dependence on the consulting business, and that is showing you some signs of improvement. There is a double-digit increase in the company's Capco order book, which basically means the consulting order book, and that's seen as a lead indicator of macro demand. And secondly, the management, when we chatted with them on Friday, also said we are seeing green shoots in discretionary spending. So the street likes that statement.
All right, that's Wipro and HCL Tech. From IT to telecom. We're talking about Jio next, which is eyeing assets in Sri Lanka. Reema, back to you.
So Jio is one of the three parties interested in acquiring Sri Lankan's national telecom company. It's called Sri Lanka Telecom PLC. Now, the Sri Lankan government wants to divest, privatize the company. So on the 10th of November, they had said that, they'd put out proposals, and the last date for submission of their interest was on 12th of January. So 12th of January was just last Friday. And after that, the Sri Lankan government has announced who the three parties are interested or who have bid for it. And one of them is Jio Platforms. So Jio going global.
All right. Thanks a lot for that. Well, Mangalam is joining in to give us the news on Tata Consumer this morning. Mangalam, over to you.
Well, when Friday everyone was done with their dinner, Tata Consumer went ahead and walloped two companies. One was Ching's owner Capital Foods for around 5,100 crores, and the second was Organic India for about 1,900 crores. Organic India is the foods arm of Fab India, which does packaged teas, herbal products and health supplements as well. Importantly, both these companies, Ching's company Capital Foods has a revenue of close to around 750 to 770 crores and margins upwards of 20%. For Organic India, the revenues are closer to 400 crores with margins between 7 to 18% itself. So on an arithmetic basis, this would add around 8 to 10% to the company's revenue. But both these companies are value accretive and margin accretive for the company itself. These acquisitions have been done at a valuation of 6 times price to sales. Tata Consumer itself trades at around 7.5 times. They're done at 35 to 37 times EV to EBITDA, and Tata Consumer itself trades at around 54 times. So these are also valuation accretive because they've been acquired at a slight discount to Tata Consumer's own valuations. Importantly, there's massive scale. As we spoke to the management, and they've said that Capital Food with margins and synergies can actually do close to around 30% EBITDA. Their revenue can grow multifold from current levels, even organic. And both these deals will be EPS accretive in year 2 of the acquisition. Tata Consumer, as the stock has been doing extremely well, is at a record high, but this deal is positive, expected to open in the green, and maybe, perhaps, then see some profit breaking.
Okay, thanks a lot for that. Well, back to Rima now to track Just Dial this morning. Rima, how did it look?
Well, the key highlight is the margin expansion. So the company's top line growth is okay. It's about 1.7% quarter on quarter, 20% on a year-on-year basis. But look at the margin expansion. Margins have come in at 22.8%. This is an over 400 basis points expansion on a quarter-on-quarter basis and about a 10 percentage point increase on the year-on-year basis. And the company's margins have been on an upward trajectory. So I think this is one of the key metrics that the street will focus on.
All right, Rima, thanks very much for that. Sort of power pack day for Rima with IT telecom both kicking in. Avenue Supermarts is the next one we're talking about with numbers coming through. Mangalam is back with us with more. Mangalam, morning.
Well, largely in-line numbers coming in from DMart, but there are a few positives, and that's something that the street will like. Why is that? Revenue, the company had already told us that 17.3% is the growth that they've seen in their standalone revenue. The consolidated revenue too has grown at a similar level itself. Gross margins have remained slightly stable. EBITDA has grown at 16%, and that's where the mild operational beat has come in, as the street was wondering that if the product mix deteriorates further, that could impact their margins. But there, the company said that the contribution from general merchandise and apparel have improved, and trends are encouraging post-Diwali. E-commerce business is doing well too. The losses have narrowed. The revenue has grown upwards of 20%. And the stock actually, after their third quarter update, has seen a correction of almost 6.5%. So expect it to bounce back a little bit today.
Okay, thanks.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Vivek on the back of the big win for BHEL. Vivek, morning.
Well, good morning. It's been a very strong year, and BHEL is all set to end FY24, with some of the strongest order inflows it's ever seen, at least in the last decade. So what's actually happened is that it's a confirmation of the news that's been reported quite widely. So NLC's Talabira thermal project, this particular award for the construction of the EPC plant has gone to BHEL. Remember, the letter of award has been received. It's a 3 into 800 megawatt power plant, and the scope of work as far as BHEL is concerned is all encompassing. So the company would be supplying the equipment, the erection as well as the commissioning, as well as civil works. All of this would be done by BHEL. The size of this particular contract is well in excess of 15,000 crore rupees. Also, one thing to keep in mind today, BHEL is actually in the F&O ban list today. Order book at the end of H1 was over 1.14 lakh crore. Order inflow till H1 was close to 33,000 crore. But it appears as though, FY24 ending, it will be a lot higher than that given the slew of order wins it has received in Q3 so far.
All right. Thanks very much, Vivek, for that. Well, Anantraj, there is a QIP coming, and Sonal is here with details on this one. Sonal, morning.
Good morning, Prashant. Well, Nimish had highlighted in the D Street Chatter that this would come by, and this is now official. They will be raising funds via QIP. The size is around 500 crore rupees, and to decide on the indicator price, they do have a meet on 18th of Jan. But sources are suggesting the issue price could be around 296 rupees a share, which is a 10% discount to Friday's closing price. This would mean a dilution of around 5% post-issue paid-up equity share capital. But yes, the stock will be in focus because of this huge fundraise that they are planning.
Right. Okay, all right. Let's wind this down then. Upasna, tell us some more stocks in the news.
Well, first up is Anand Rathi Wealth. The private AUM increased by 15% sequentially, and the total AUM stood at 55,057 crores. Mind you that it surpassed the FY24 guidance given by the company. That is around 51,000 crores is what the company had guided for in terms of AUM. Well, the company has achieved 77% of its FY24 guidance in 9-month FY24 itself in terms of revenue and PAT. And 9-month FY24 revenue stood at 555 crores and PAT stood at 169 crores. Net flows also grew by 41% on YoY basis. And in terms of Q3, it was nearly about a flat growth in terms of revenue, and even PAT also saw an uptick of just about 1%. The total expenses of the company sequentially were down about 2%. Now, next up is LIC. The company gets an income tax demand notice worth almost 1,370 crores from income tax authorities of Mumbai.
All right, thanks a lot for that. Plenty of stocks in focus. Here's a quick recap of our top stocks. Stocks with positive news flow. There's HCL Tech, Wipro, Reliance, Tata Consumer, Avenue Supermarts, BHEL, Just Dial, Anand Rathi Wealth and Anant Raj, while only one stock with negative news flow because of that IT expense that has come through for LIC. So that stock could be in the red this morning, a sentiment overhang over there. But crude has been falling. There's lots that's happening with the Red Sea conflict and things are just escalating over there. Manisha Gupta is joining in to give us a roundup of all the action there. Manisha, all of that is, assumed center stage now in global geopolitics. But tell us what's happening with crude?
Thank you for that, Sonia. Well, yes, Friday was a very strong day. We saw WTI at 75. The Brent prices crossed above $80 a barrel as well. But since then, there is some profit taking that we have seen. One, the markets believe that there may not be an interest rate cut in the first quarter, and that's weighing on. The US dollar is on the stronger side. The demand from China and US is still on the weaker side. So there is this concern about oversupply going forward. While, of course, Red Sea is a center stage, but we haven't seen that a premium come into the markets or prices very strongly. It does come as a knee-jerk reaction, but there is no sustainability on that yet. In the meanwhile, you also have seen Citi lower the Brent price forecast. They're also expecting a 1.2 million barrel per day of a surplus in this year in sense of crude, and that's weighing onto the markets. So now Citi has put an average for crude prices at 70 for this year and 60 for 2025. And we've seen other banks and brokerages also do similar revisions, and that's what's weighing onto the markets as of now.
Okay, thanks a lot for that. Well, let's step into a quick break. On the other side, Prakash Diwan will join in. Lots of stock talk lined up, so don't go anywhere. Also, Subir Malhotra, the Executive Director and Chief Financial Officer of Capacity Infra Projects, will join in to discuss their recent fundraising via the QIP route.
Welcome back. Hope you're having a good morning. Well, plenty of stocks to discuss and help us out with some analysis. Prakash Diwan joins us on the show. Prakash, we'll talk about IT a little later. I want to ask you first on Tata Consumer. It appears they've made two very good acquisitions. The stock, though, is at a 52-week high. How would you approach the stock? It ended virtually at the high point of the day as well. How did you read that? Valuations are good. It's going to be adding revenues. Margins are better. Big scaling up opportunity as well. Your take.
Good morning, Nigel. So I think while, the fact that this acquisition was in the making was known, what's important is that the valuation at which the deal has been struck, the transaction has been consummated is absolutely a win-win. There's no, seemingly there's nothing of an element of unfairness on both sides. And for Tata Consumer, it kind of ties in very well with their strategy to increase the share of the pantry, as they mentioned some time back. And this is something where you have business, the brands, products which are anyways flying off the shelf. It's not something which they'll have to invest energies and time and resources into, which means it helps them get top line. The kind of reach that they already have with the acceptance of the brands will make a lot of sense. And it also starts giving them the giving them the footprint in segments which probably are still very nascent, especially on the culinary side. If you look at sauces and soups and all of this, this is something where a lot of the multinationals have been very dominant, and that's where they'll able to make some inroad. While the stock is valued well in terms of being at 52-week highs and all, I think it will continue to do well. The momentum will be on. Wouldn't be surprised if it starts doing, about 15-20% kind of a move even from here on, given the fact that nobody's going to be selling it with this clear visibility. So among the FMCG pack, we've spoken about how Tata Consumer has started becoming much more pervasive in that sense, and that's why the premium valuation will continue.
Okay. I actually want your thoughts also on HCL Tech and Wipro, right? Both came out with numbers that beat street estimates. But before that, on Tata Consumer itself, we had the management, Sunil D'Souza, who's the MD and CEO at Tata Consumer. It was a very interesting discussion. He told Mangalam that they are expecting a high double-digit growth from the Capital Foods acquisition over the next few years. Here's a small snippet of that conversation.
From a brand perspective, now with these two coming in, I have all the cuisines to appeal to the Indian consumer. The Sampan appeals to the Indian taste, Smith & Jones is Western, and Ching's Secret, I would say, right now it is mostly Desi Chinese, but can probably go Oriental. So I've covered the entire plethora of cuisines that an typical Indian would have, and that plays perfectly. Strategically made sense. I can say that we are going to grow aggressively on the top line. Define aggressive as high, strong, double-digit growth, right? And EBITDA would be significantly accretive to our portfolio. So we would see a significant increase in the EBITDA margins for ourselves. I would say significant change in the growth trajectory of TCPL with these brands and EBITDA accretive. 400 basis points from trade margin is a given because that we know the number from this thing. The integration team now will go to every single minute detail and then draw up the map. We do expect significant amount of synergies to come out, given that they were, as I said, they were operating subscale.
Okay, in-depth interview coming up there. You can catch excerpts of that exclusive conversation all day today only on CNBC-TV18. But back to our discussion with Prakash Diwan. Prakash, on HCL Tech, right? The revenues and margins were a beat, and there is now some momentum coming back in the IT space. Would you recommend buying into HCL Tech now?
So Surya, it's always a challenge when you kind of buy something which, and today, of course, it's going to open up, gap up, and people might start having doubts on that. But if you believe that within IT, things could start kind of looking positively for the next few quarters because of the start of the new year, and some of the TCVs could consolidate and cement themselves. Definitely, all the four players make a lot of sense. HCL Tech seems to be much more aggressive. They found their mojo back in terms of what they are always been good at doing. And remember, HCL Tech, in spite of whatever valuation it stands at, is still lesser than Infra and TCS in terms of a PE multiple. And on the FY25 basis, in fact, it could probably be more attractive than some of them. So from that perspective, yes, it makes sense. But do you have enough meat on the bone in terms of buying it at this point? You'll probably have to wait for better dips to buy and really make money. But at least very clearly, those who own it, those who hold it, will find it extremely easy to kind of now decide to continue holding it till kind of the next couple of quarters, throw some more pleasant numbers, surprises up. But valuation-wise, it's definitely in a very good comfort zone. There's not much of a stretch that I can see from the FY24 and FY25 valuations.
Got it. Prakash, so with IT, I mean, if you own some of these names, hold on, right? Things are getting better.
Oh,
degrees may vary, and that debate will continue. But maybe we've seen the worst.
Yeah.
That's the common theme. Reliance, Prakash, that was the second leg of the market for the market. Incrementally, what are the triggers?
So, Prashant, interestingly, Reliance has, the biggest impulse in terms of re-rating that is likely to come is going to be from the O2C business. It's within the Reliance stable, it's the unsung hero. We've already seen how retail has galloped ahead of the others. And from the demand numbers that came in, some of the other ground realities that you start kind of dissecting, you start getting a feel that even retail will probably see some very strong growth continue even in the December quarter. So I'm very excitedly waiting for the numbers for Reliance, because all these three engines are going to be revving up very well. And now telecom is at a juncture where very clearly it could be Bharti which flags off domestically in India a price hike, but Reliance Jio will of course follow suit. And with the kind of digitization and all of that, kind of the consumption pattern that is going on data, I think Jio also will start getting to be benefited much more than what it has in the last. In fact, Jio has not been valued richly for the last many quarters, given the fact that people expected it to only do well when the price hike actually takes place. And that is getting more and more imminent. And of course, the news flow that is around, them getting to be looking at a global foray with the first acquisition overseas makes a lot of sense. I mean, Bharti's tried that out in a market which was a bit immature. What Jio is talking about in Sri Lanka seems to be a much more safer bet and a much more manageable size in terms of that. So there could be very clear triggers from the oil and gas business. There could be very clear re-rating that would continue for the retail business, given the scale that it has mopped up. And so at 2,700, if you ask me, Reliance is probably out of the Nifty, one of the most undervalued stocks. But then, it has always been the case. Reliance takes time to consolidate, to grow. But the moves in Reliance, from 2,100 to 24, 25, 2,600 has been pretty good. But then it's consolidated in that zone. I think the next move will take it to about 3,200, 3,300 very soon. So that's the kind of move that you could look for. And of course, get up for some sort of announcements during the year, maybe during the AGM later this year, where you'll start seeing a calendar or a timeline on the global IPOs or some sort of IPOs coming out of the businesses. So pretty exciting times, and I think it's carrying the weight of the Nifty's move beyond this 22,000, which seems very imminent.
Okay, well, I wanted your thoughts on a couple of these smaller companies as well. A lot of companies raising funds, so we'll get to that. We have a quick chat lined up with Capacity Infra, the first management on the show today. The stock hit a fresh 52-week high on Friday after the company successfully concluded their 200 crore QIP. They plan to use the proceeds to fund their working capital requirements. To discuss more on this, Subir Malhotra, who is the Executive Director and Chief Financial Officer of Capacity Infra, is with us. Subir, thanks a lot for joining in. If you can start by telling us about the fundraising, what do you plan to use this money for? Will any of it go into retiring debt, or is it largely for expansion purposes? And what is the kind of interest that you saw in the QIP?
So good morning, and thank you for getting me on the show. Yes, so we've had another successful round with the QIP. It's a kind of a deja vu with what happened with the IPO, actually. And we closed the QIP on Thursday. It was very successful. We were oversubscribed at least 4 times on the IPO. And the main purpose of the IPO is definitely the growth in the market that we foresee. There's a very strong momentum that we see in the business, and we strongly want to tap onto that. Yes, but the basic reason of the QIP is growth and to improve the execution of the website.
Okay. All right. Subir, then a couple of points if you could give us. I think earlier you were guiding for 18 to 20% growth for, I think, the next couple of years, and post that it's going to be mid-teens. So tell us, what kind of growth number are you looking at? And I think part of this money will be used to retire debt. I'm looking at your interest costs on a quarterly basis. It's around 20 to 25 crores. Does debt come down? Does the interest cost come down as well on a quarterly basis, on a yearly basis, if you want to give us that number?
I would really say that most of the money that is coming in from QIP is going to be used for growth. Most of it is going to be used to improve the execution of the projects at the moment that we already have in hand, and to strongly bid and execute the strong bid pipeline that we have with us. That would, I say, be the main purpose of the monies that we are collecting. And that is what we have gone to the markets for.
What's a growth range then? I think at the end of the first quarter, I recall the street was working with 18 to 20% revenue growth. And I think order inflow, you were guiding for around 2,200 crores. So give us an updated number. What's the revenue growth we should be looking at in the near term, 24, 25, 26? And also, can you tell us what's the order inflow looking like?
The order inflow for the year outlook was 2,000 crores. We've already clocked 1,750 this year. And we are very, very hopeful of, fulfilling the outlook that we had given for the order inflow. As it is, and what I just said in the past, because there is such a big pipeline over there, we had to come back and say that, yes, we need more working capital from this QIP. Having said that, the numbers over there, H1 has closed at close to 830-40 crores. And yes, we are very sure of getting into good seats there again this time.
Okay.
As you can understand, we are in a little blackout period, and so I'm kind of hesitant to what exactly.
Sure. So you're saying by the end of the year, 2,000 crores is the kind of incremental order book that you're hoping to clock in, right? By the end of FY24.
2,000 is what we want to do in this year, and we are very, very positive. There are
got
no
it.
ways that we will.
And what would this mean for your revenue trajectory? What will you do by the end of FY24, and what is the kind of growth outlook for 25?
So I would broadly say that we want to get a CAGR of at least 25% in the next couple of years. And given the fact that how the first few quarters have moved of this year, I think we are very, very hopeful that it can very easily be maintained. Okay, 25%
CAGR is what you hope to maintain. Got it. Thanks, Subir, for joining in. I appreciate your thoughts here. That is the word. That's the word coming in from Capacity Infra. Prakash Diwan is still sitting by with us, so let's get a word in from him. Prakash, I wanted your thoughts on Polycab. You know, there's a Goldman Sachs report this morning which talks about how, at this valuation, Polycab is looking good, and they have a high target price as well. After all that, after all the dust has settled, do you think this overhang will still remain on the stock, or do you think it's a good time to be buying into Polycab? Prakash, I can't hear you. I think you're on mute. If you can just unmute yourself.
So I'm saying,
go ahead.
So it's quite interesting at, the junction which Polycab sits at. It's very interesting if you actually believe that the business is good, has been good, continues to be good, given so much of work that's happening within the sector. You will see a change in mindset for a lot of the players in this business. And you'll probably see all these corporate governance issues getting over at some point in time, because the learning overall in the sector is that you don't do things which hamper your not just your reputation, but also the perception around the growth in the top line and the margins. Now, imagine if Polycab continues to show growth and all of this, which I don't know whether that's true or not, but all the purported sales that were not captured on the books, if that was to be captured on the books, things could look so different. And that goes for a lot of the other players in that segment, by the way. So I believe it's a very interesting lesson for everybody in that space. Wherever, this potentially could have happened, people will make sure that there are no mishaps of this type in their own businesses. Polycab might take some time to struggle to get back that confidence from people, because, when it started falling at 60,000 crores market cap, it was pretty richly valued. So, that the trigger was essential in terms of rationalizing some of the rich valuations. But if you want to look at Finolex Cables, I mean, that's another company in that same business. Of course, it might not have the same kind of a reach and brand recall, but that space is going to be continued. That FMEG and the cables and wire space is going to be very interesting. And I would suggest people look at it differently now, because all of them will report some very decent earnings growth, given what's happened and what they've learned from this episode. So what the damage to Polycab could probably be an advantage to some of the other people in terms of the learning. And that's where I'm not saying it's evident that everywhere this is happening, but if there was any potential of those things happening, it probably now gets obviated.
Okay. All right, Prakash, we leave it there. Good speaking with you as always and getting a sort of opinion on a whole host of subjects. Thanks very much for being here on the program. Well, let's turn our attention back to the market, the Nifty Bank, and how's the trade setup looking with about 13 minutes to go for the pre-open. Anuj is here with exactly that. Anuj, morning.
Morning, Prashant. Well, you know what? A couple of important cues for the market. I think both global and local cues. First of all, the US bond yield, it's back to 3.95. In fact, now even below 3.94. I think that's a big positive for global markets, and that's what you're seeing across the board, a bit of a risk on. And of course, the next big cue domestically is HDFC Bank's numbers tomorrow. For a change and for a welcome change, they're moving from Saturday earnings to weekday earnings, and that's tomorrow. And I think tomorrow you have the Fin Nifty expiry as well. So in that sense, interesting. because it's corrected a bit after the December rally of 10%. It's corrected about 3 or 4% ever since its update. So it'll be interesting to see how this stock pans out. And then, of course, you have the Reliance and HCL numbers on Friday, and which we'll react to on Saturday. Remember, this time we're working on Saturday. We have a trading day. Anyway, now coming to some more cues, the Nifty IT, I think it's set for some more gains. Wipro ADR was up 17%. So back home, it should rally 11-12% because it was up about 4 or 5% on Friday itself. And the Nifty is likely to test 22,000 today. The Nifty IT perhaps could make a move even towards its all-time highs, which is 10% away from here. It hit the 52-week high, of course. Couple of caution signs, though. First of all, the put call ratio, it's gone up to 1.43, and after a gap up, maybe even will cross 1.5. And number of stocks in F&O band, that list has now crossed 15. That's a bit of a warning sign. And today will most likely challenge 22,000 on the Nifty. Now, that's not a level at which you want to make a fresh entry. Let's see, there's a big resistance at 22,040 to 22,100. Support comes in at 21,700 to 21,800. It's a very important week for the Bank Nifty, as I said, because of HDFC Bank's numbers. It managed to reclaim the 10 and 20-day exponential moving average. In that sense, let's see if it can build on that and test the resistance levels first at 47,800 to 48,000, and then the all-important one, 48,400 to 48,600.
Okay, Anuj, thanks for that. There's also no US markets, right, later in the evening. So generally when the cat is away, the mice are at play. So let's see. Big moves expected in the market today. Thanks for that. Let's step into a quick break. On the other side, Sudarshan Sukhani, Prakash Gaba will join in to give us their view on what to expect as we begin a brand new week of trade.
Welcome back. Just a couple of minutes to go for the pre-open session, and we'll have rates coming up. The GIFT Nifty indicating a 100-plus point higher start. Sudarshan Sukhani is with us, and so is Prakash Gaba with a technical setup on things. Gentlemen, good morning. Great to have both of you here. Sudarshan, if we can start with you. I mean, Reliance started firing early on last week, and then IT joined on Friday in a big way. How are things looking? I mean, are we going to go to past 22 on the Nifty before anything else?
Yeah, good morning. That seems to be the most likely scenario. This new highs are usually bullish, so I don't think the Nifty is going to stop here. We'll go past 22 or whatever number the Nifty wants to, but we'll go higher. Reliance, we have already discussed earlier, it's a buying opportunity for positional traders, for swing traders whenever there is a small dip, and that opportunity continues to exist. I'm not so upbeat on IT because I'm a little confused, but it's easier to follow the Nifty. The Bank Nifty may actually play catch up now. So the Nifty and the Bank Nifty are both buy on dips.
Okay, the Nifty and the Bank Nifty are both buy on dips. That's a great thing for the bulls, right? We have Prakash Gaba who joins in as well. Prakash, it seems like it's just a matter of time before the Nifty hits that 22,000 mark. But what are the leaders of the market now? Which are the stocks that can lead it there? And what's your overall view on the index?
Well, good morning to you. So far, looks good to me. I would say the Nifty is near 22,000. It's a matter of time it goes there. What are the important levels? The important level is 21,700. As long as we are about 21,700, I think this is viable. And Bank Nifty, I think 47,500, 47,600. These are the zones of support. So if it's above this, it's fine. It needs to cross 48,100. That could perhaps bring in some more short coverage. That could propel Nifty up. So Nifty and Bank Nifty both look good to me. As far as stocks are concerned, I think I like State Bank of India. Certainly looking good to me. Seen a basic positive structure, seen a good down move, resilience in the down move, and a good support near the lows. Trading at 635.33 now. State Bank of India have a stop below 630, just 3 rupees. On the upside, we have a target of 645. So yes, State Bank of India looks good to me. Second stock that looks good to me is L&T. L&T has seen some good traction, is in up mode. A buy signal has been generated here, trading at 3565, stop below 3540. Possibly we'll see levels closer to around 3625 zones. Third stock that I like is Bharti Airtel. I think it's in up mode here, trading at 1076. I would have a stop below 1065 on Bharti. Possibly we'll see levels closer to 1110, even beyond the days to come. And finally, I think I'll go for ITC, low beta stock, good support zone, trading at 466. I think it can go to 475. stop below 462 should be okay, Nigel.
Okay, Prakash, thanks a lot for that. Sudarshan, coming back across to you, you've given us your call on the index. What about individual stocks?
Well, there are a lot of buying opportunities. Titan is a buy, big rally. It's a consolidation for the last 15 days. Chances are it will break on the upside. Buy with a stop under 36.80. Sun Pharma has a narrow consolidation of 4-5 days. The stock has been consistently rising up. Buy with a stop under 1310. L&T again, similar small consolidation, very good day on Friday. So buy with a stop under 35.25. And my only short is an intraday short in Hind Copper, where some signs of distribution are now visible. Intraday short, the stop above 269.
Right. Thanks a lot for that. Well, let's do one thing. Let's take a quick commercial break on that note. On the other side of the break, we'll have the pre-opening rates. We'll also have Sri Krishnan H, who is the MD and CEO of Karnataka Bank, to put focus on their business outlook going forward. To stay tuned in.
Co-powered by.
All right, let's focus on some macro cues this morning. India's December CPI or inflation came in lower than market estimates, and that can be a further boost to the bond markets and banking stocks. However, the industrial production index for November was a disappointment. Lata is here to decode all of that data for us. Lata, over to you.
Yeah, the CPI number coming in at 5.69 is way below the CNBC-TV18 poll of 5.9. Now, being below our poll is less important. It's way below RBI forecast. RBI gives you a Q3 forecast, which was at 5.6. But now we have October, November, December, and the average works out to 5.37 versus RBI's 5.6. So going way below RBI forecast. And the worries were really about veggies. The tomato onion inflation, if you remember, in October, November. Veggies have fallen 5% month on month. And even year on year, the fall in food prices, it looks optically higher at 9.5%, whereas food prices were higher 8.7% in November. But this is more a base effect issue. Veggies have fallen, but cereals and pulses are still a bit of a worry. The bigger thing is core inflation. Core inflation has come in at 3.9. If you remember, the RBI's intention, or rather mandate, is to bring inflation to 4%. Core is a very big contributor. If core has come to 3.9, then 4% somewhat looks accessible. Besides all this, we all know that the US PPI numbers, producer price index, came in below expectation, at 0.1% minus month on month. Expectation was plus 0.1% month on month. So all told, now the talk in the market is, will Reserve Bank change its stance earlier? At the moment, the broad expectation is they will change their stance in April, and rate cuts come, only in the second half of the calendar year, that is, June or August. But now, right now, hot from the oven is a Citi report saying that RBI changing its stance in February itself becomes a possibility, though their base expectation is still April. So all good on the front with US and Indian CPI ticking lower. We should expect bonds to be very cheerful in the near term. The only negative from the macro was the November IIP numbers coming in at 2.4% versus expectations of 3.5%. And everything was negative. Consumer durables, consumer non-durables, capital goods, all of them were minus, contraction. Possibly because November had many holidays and people had overproduced in October. So it could be a one-off, but there is a little bit of cloud over the NSO's full-year GDP forecast of 7.3%, with such a dire number, but maybe it's a one-off.
All right, Lata, thanks a lot for that. By the way, the pre-opening rates, just look at that, 240 points higher on the Nifty now, led solely by the IT stocks. Wipro, HCL Tech are your big movers, up almost 10% in pre-opening. We'll wait by for these rates to adjust, but Tata Consumer is the other one looking very good post the acquisition. So not too far away from that 22,000 mark. Looks like it's going to be just a matter of time before we get there.
Indeed, Sonia, the pre-open's looking good, and it appears, at least kickstart trade, it'll be a very, very good start. I think, though, we can see some kind of tapering off from 250 points gain, maybe 100, 150 point gain could be possible. But let's focus on Karnataka Bank. The stock was buzzing on Friday after Ambit initiated coverage on the stock with a buy rating. Mr. Sri Krishnan, the Managing Director and Chief Executive Officer at Karnataka Bank, joins us on the show to discuss the business outlook. Hi, sir. Morning, and thanks so much for joining in. Well, Ambit is clearly bullish on this stock, on the bank, and they have put out a couple of numbers. So I wanted your take on what they've put out. They're assuming that you'll grow by closer around 18%, with ROEs moving up to around 14%. Do you think that's possible?
Good morning. I just want to put up a disclaimer right away to say that, we are in the quiet period. We have the quarterly results, the Q3 results on January 23rd next week. I'd be able to really say a few more numbers in real terms, next week. But having said that, yes, the report has been bullish. The bank, we are bullish about the bank as new management. And more importantly, there are other capital market investors who have also been bullish. So specifically to your question, this is a stated objective earlier that we will hit 100,000 crores on the gross advances within 3 years. And this is something that I stated on your channel in June. And we stick to that. And we have grown the last quarter, that's Q2, by 17% plus on an annualized basis on the gross advances. The rest of the metrics are also growing correspondingly. Not as much on the deposits, but we will pick up definitely there as well, because we have a very strong deposit franchise, a very strong branch, and a very strong digital franchise that we are building up now. So given that outlook, we believe that we are on track, and whatever has been stated by the analysts who so respected, we believe that we should be able to meet their expectations.
So growth, you're sounding confident on ROE of around 14%. That as well as gettable.
I have said this earlier that the guidance again. I go back to the Q2 guidance. So we have always said that we'd be about 14 to 16, and we would maintain in that range.
Okay. On the loan growth side, just wanted to understand, where are you seeing maximum amount of traction from in terms of corporate growth, retail loan growth, and what do you see as the big trend in 2024?
So 2024, based on whatever CPI numbers that Lata just talked about, and over our own views, we believe that the corporate growth, the MSME growth, and the SME growth is going to pick up a lot. But as a bank, we are focused very, very clearly on SME, MSME. Corporate side, we go up to the mid-sized corporate, not necessarily the large corporates, because we do have certain limitations related to overall appetite and the numbers based on our balance sheet size. And our retail growth has been very, very encouraging. So we have a mix which is almost like 50-50 between retail, agri constituting of 50%, and the balance through MSME and mid-sized corporates. All our assets are over 90-95% are collateral based. So that is also a very good kind of risk appetite, that we have been taking so far. Yeah.
Okay. Since you're talking about that, you have 91% of your book is a secured loan book, right? And you are taking a lot of initiatives to improve your collections, etc. Would that mean lower credit costs for you in FY24 compared to what you've seen last year?
It will be. There are three things that we are doing. One is that, we are partnering with a lot of NBFCs stroke fintechs on the co-lending side. So the origination, comes from them. Credit controls and our metrics are superimposed on their origination. So as a result, we'll be able to acquire credit at a much lower cost. That's one. The second is that, we have actually a branch channel where we have deployed a lot of sales, sales field force. And this is on the retail asset side. And the third is that we have a digital outlook, and we have now digitized many customer journeys where onboarding of loans, including vehicle loans, commercial vehicle loans, and also on the housing and the rest of the personal loans, etc. So while, yes, right now there is a skew to collateral-based and secured lending, but over a period of time, we will also institute some changes to cash flow-based lending. And this is something in the works. Again, nothing to be said as an outlook for this quarter or the next quarter. It is a vision that we'll execute as the new management of Karnataka Bank.
Mr. Srikrishnan, hi, good morning. Prashant this side. I mean, over the last decade and a half, 2 decades or so, I mean, Karnataka Bank is gone through so much. I mean, I remember having conversations with earlier managements about whether it's an acquisition target, as one of the old private sector banks. etc. I mean, all of that, of course, is thing of the past now, right? I mean, any
Good morning, Krish.
Yeah, sorry.
Yeah, morning, Prashant. Yeah. So yes, I've heard about this, history related to the bank, and there have been some conversations that have happened. But I think that organic growth is something which we are bullish on, and there is a lot of potential. We have excellent skilled staff at our branches who are able to underwrite credit proposals and also make sure that the processes are very, very robust. We are trying to superimpose the digital side on the credit processes, and also making sure that there is a faster turnaround time as far as the retail and the mid-sized corporate loan approvals are concerned. So there are lots of changes that we are doing on process, product, technology, for which we needed capital. As you're aware, we raised capital in November, 800 crores. And we believe that, we are on the right track, strengthening the financial position of the bank, strengthening the financial services that we can offer through ourselves, as well as the partnerships that we have entered into in the recent past. And third is that there is new management which is coming to execute this vision and the strategy.
We'll wish you all the luck, sir. Thank you very much for joining us, and I hope this is, the first of many conversations through the course of 2024. Thank you very much for joining us here on CNBC-TV18. Good luck. Well, that's the management of Karnataka Bank. Now, the standout brokerage notes this morning. Nimesh has parsed through what's out there, and he's got the best. Nimesh, morning.
Hi, morning, Prashant. Sir, today's standout is in Dixon Technologies. Goldman Sachs has today downgraded the stock to sell from neutral, and they have a target price of 5,400. Now, they have identified three main concern areas for Dixon Technologies. First, with Dixon potentially manufacturing 29% of non-Apple phones in India over the next 3 to 4 years, any further increase is going to be unlikely. So that's the first key concern. Second, while the overall IT hardware opportunity is quite sizable, Dixon's ability to win contracts in that space is not yet evident. And third, with other B2C EM verticals, which used to be a big focus area for Dixon Technologies, that is now seeing intense competition from other listed players. So these are the three key concerns. Now, even in terms of valuations, the stock is trading at close to 55 times on FY25 estimated price EPS, which is at a 30% premium to the other Indian peers, as well as 5x premium to the global peers. Now, the stock has rallied almost 70% in the last 1 year, and which is pricing in a seamless execution and more order wins. So on back of higher valuations and concerns emerging now, today they have downgraded Dixon Technologies to sell with a target price of 5,400.
Okay, thanks a lot for that. Well, HCL Tech and Wipro are also in focus. Reema is here to tell us what the brokerages are saying on the numbers. Reema, over to you.
Well, the numbers are ahead of street expectations and the stocks are likely to do well. But I just thought I'd put on the table the other side of the argument. The investors who are not convinced about the numbers, despite it seemingly appearing to be a pretty big beat. So CLSA has actually downgraded HCL Tech to an underperform from an outperform. Their target price is increased to 1,536. They said bunching up of many catalysts led to a strong beat, but they see weak sequential growth in the next quarter and the quarter following. Ambit too said qualitatively the numbers are better than peers, but the valuations of HCL Tech keeps them at bay. Valuations are at 24.9 times forward multiple, 84% premium to the pre-COVID 3-year average. They do prefer, it's a sell call on HCL Tech with a target price of 1360, but they do prefer HCL Tech to Infra and TCS. On Wipro, Bernstein has an underperformed rating. They're saying despite the growth underperformance, valuations are at a 5-year average, are above a 5-year average, while Nomura has a reduced call on Wipro. Their target price is 410, which means about a 12% downside from current level. They're anticipating the recovery in growth to be quite feeble. So this year, Wipro is likely to end with about a 3.2% revenue decline. But next year, FY25, which is where the hopes are of a recovery, they're saying that growth will only increase to 1.8%. So not a meaningful pickup. And again, it will lag peers. Back to you.
Okay. Yeah, you can catch the HCL Tech management actually in just a short while from now. So we'll get a grip on what's happening with the sector and the earnings. Metropolis Health is the other one that's in focus this morning. Ekta is here to tell us why she's watching that one. Ekta, over to you.
Thanks for that. Well, Metropolis has clarified on the recent reports with regards to the Delhi government's Mohalla Clinic project. Remember that the stock was down on Friday's trading session. Well, the Metropolis Health has basically said that they were awarded the smallest portion of the contract after being the second highest bidder. They followed all due processes and guidelines as per their contract, and all samples were handed over to them, were duly tested as well as reported. The billing for the testing was done on the basis of the sample received, test performed as well as reported, and the revenue from the Mohalla Clinic project since inception in Feb of 2023 was just about 3.58 crores, which is less than 0.5% of their total revenue. So due to delays in terms of receiving dues, the company in fact had sent a notice to the Delhi government as well and has expressed their inability to continue with the Mohalla Clinic project. Remember that the stock was under pressure. These reports and allegations had come out much earlier, which was on the 6th of Jan. But, you know, there was probably some amount of negative rumors regarding this, and hence this clarification from the company should probably put things in order, indicating that the financial impact at least is negligible for Metropolis here.
All right, thanks a lot for that. Well, let's get back to tracking the markets for you. In less than a minute, the market is going to open and looks like it's going to be a very, very strong opening. Remember, it's a record high for the market this morning as well, if the Nifty hits that 22,000 mark. And it's taken 25 sessions for the Nifty to climb from 21,000 to 22,000. And in the last 1,000-point Nifty gain, Reliance has been the biggest contributor to the index. All eyes will be on Reliance. That comes out with its numbers later on Friday. And the top Nifty contributors since the last move that we've seen have not only been Reliance, but names like Infosys, HCL Tech and IndusInd Bank. So very interesting trends over there. IT is coming back in a big way, although numbers have not been that great, but and neither has commentary been that great. But I guess valuations are looking interesting at this juncture. At least that's the market's verdict. But here you go, the first take on the index in just about a second from now. You have a very strong opening, 150 points in the green for the Nifty, 500 points for the sensex, so charging away. The Nifty is at a fresh record high of 22,000. This is the first time ever that we've hit that 22,000 mark on the index. So very, very strong moves coming in. It's a party on the Lal Street, no two ways about that. Well, let's see who's leading from the front. It is the IT stocks, Wipro, HCL Tech, Tech Mahindra, LTI, Mindtree, Infosys, all in the green. Wipro is up 10% right now. Huge move coming in on Wipro, and the early tick on the volumes are also pretty high. And that's leading from the front. Remember, the numbers were muted, but they were better than the expectations that the street had put up. And I guess that's something, you know, that the street likes. There's a bit of a relief rally there. Polycab, by the way, in the broader markets is starting to see some buying action, so don't lose sight of that. Up 2%, okay, 1% now on Polycab, so that's one stock to look at. And then you have Tata Consumer up almost about 2% odd. Just look at that, Nifty at 22,000. Big milestone is what we've hit over there. Tata Consumer, after those acquisitions, also looking pretty good, up about 2% odd. SBI, ITC, IndusInd Bank, Bajaj Auto, all leading from the front this morning. In fact, there are just a few stocks which are in the red. There's HDFC Life, there's Eicher Motors, HUL and Bajaj Finance. They're just a tad bit in the red. But really, the big breaking news this morning is that the Nifty has hit that 22,000 mark. So, you know, I mean, kudos to everyone who's invested, retail investors, traders. This has been a market that's really dominated by a lot of the domestic money that has come through. And, you know, the kind of impact that India has had compared to its global peers. I mean, across all fronts, right? We've been talking about all of the reasons ad nauseum, but very, very good opening.
And it appears we're just getting started and the music was playing. You needed to participate in some manner in this uptrending market. And the results are up for you on the screen. Well, let's pull up a few stocks, though. By the way, the Nifty Bank has opened up above the 20 DMA, mildly so. It's up close to around 200 points out. So the Nifty Bank is the key factor, I think, that I'll be tracking from here on if the Nifty needs to hold on to this 22,000 odd mark. From the broader markets, a few stocks that are in focus. Dhanlaxmi Bank, massive volumes out there. Their stock is up close to around 14%, so big mover out there. DB Realty, that's the other stock that's up close to around 10%, so that's moving very, very well. IRFC, that's another stock that's moved up. It's up close to around 5% in pre-open. And BHAL, post their order win, well, that one's up close to around 3.5%. Add to the list, Easy Trip as well. So plenty of stocks, just highlighted a few of them that are moving on rather large volumes. So keep an eye out on those stocks. And from the frontline F&O names, well, you have Union Bank that's up close to around 2.5%. Otherwise, most of the stocks trading with some mild gains. Alcom reacting to the negative piece of news that came in earlier today. So that's down to 1.5%. And Dixon, Nimish had pointed out that sell report coming in from leading brokerage. So that one as well, 1.5% lower. But 22,050, guys, and we're holding at that mark.
Oh, no, absolutely. So it's bright and early, and it is bright and early here in Mumbai. I may not be so in Delhi with the weather being a little foggy, but here it's sunny. The air is cleared up. But I think the view for the markets also cleared up, especially over the last 2 or 3 days, with a lot of help from the IT services back. The index was up 5% yesterday. Wipro, of course, I mean, remember, Wipro did not participate that much on Friday. Here, in the India session on Friday. So, we saw a very outsized move in the New York session. The ADR went up 17%, and we are starting sharply higher here as well. Actually, we had Kavaljit recently with us before the IT earnings came through, and we asked him that question. I mean, could kind of Wipro throw a surprise, out of the lot, because it's kind of been the stark underperformer, and of course, valuations, etc., are also the cheapest. Now, a few other names. IRFC is up about 6%. Stocks at about 120. Huge volumes on IRFC this morning. LIC is coming up with a 3.5% gain. About 856 is where LIC is at. I'll skip the tech names for a bit. DB Realty is coming up with about a 9% gain. Stocks at about 243. Again, huge volumes right now. I think we already mentioned Just Dial, which is up about 6.5%, 930 on Just Dial. Moti Sons, which is, of course, the recently listed company, last week was absolutely stellar for this one. It's starting this week with a 5% gain. There is MRPL. Now standalone refiners, I think last week, especially last Thursday, was a very big day. 15 to 20% gains on names like MRP and Chennai Petro. MRPL starts with a 10-11% gain this morning. What else? Cyient is up about 3.5%. Did well on Friday along with the IT rally. That's about it. I mean, if you look at the broader markets, this is the pack which is doing the best, which has got volumes on it as well. On the downside, HDFC Life is the largest volume-led loser. It's got about a 2% cut. You've got Zomato, which is down about 1%, is the number 2 volume-led loser. And of course, Nigel mentioned Dixon, which is down about 3% or so, and that's at number 3. Just one more name, Supreme Industries is selling off about 3.5%. It's got volumes for this point in the day, fairly large volumes. So keep an eye out on that as well. But it's 3-1 in favor of advances right now in the broader market, and the Nifty is up 160 points or so. Our market master is with us, Mihir Vora, Chief Investment Officer at Trust Mutual Fund. Mihir, great to have you with us here. Thank you very much. I want to start with, of course, congratulating you, all of us, on the 22,000 milestone.
Oh,
a 10-day break and then right there, right?
So it looks like every time I come here, we are celebrating a new high.
I was just going to say that, but I didn't want to jinx it. But every time he comes, the markets are tearing away.
We time it like that.
Not complaining. Nobody's complaining.
How are things looking, Mir? With how we had a fortnight of a break where the market didn't do very much, and then you had Reliance participating in IT. Which is started to fire as well. Yes. How believable is the IT move according to you?
So I'm still a bit of a skeptic. A lot of the move in the last couple of days would be because of short covering. I think everybody was neutral to underweight on IT, given the fact that there is a slowdown. And if you look at the hard numbers, we are still 0 to negative in terms of profit growth. Headcount is still getting reduced. So it's not all hunky-dory, especially in the large cap companies. Mid caps, of course, there is case to case good pockets of good growth, I would say. But in general, the slowdown thesis for the US and Europe does continue. And if you look at all the other hard numbers coming out of the US, there is a slowdown. Now, if the Goldilocks situation pans out, it may not be a recession, but there's certainly going to be a sharp slowdown.
In a way, it's a kind of but that's what markets do, right? They throw the most unexpected thing your way, because it's an odd time to turn very constructive on IT, because if there is something to happen in the US, it'll happen this year.
Absolutely.
Right? As you said, maybe it's a very soft landing and everything will go well. On the other hand, there could be some downside to growth, etc.
Absolutely. But it may be that situation where people start discounting rate cuts in the US and then followed by rate cuts in India. And in that situation, we have seen that cash flow generating companies do tend to outperform. So markets probably may be discounting a slowdown, and that's why you might see some of the cash flow high quality companies outperform, unlike last year or this year, for the last few months, we have seen value outperforming. You might again see cash flow outperforming.
Okay, by the way, we are all talking about the Nifty, right, at 22,000. Let's not forget the grand old index, the sensex at 73,200. Big milestones being hit on the, the grand old index as well. Meet, thanks for joining in. This has been a spectacular market and we're heading into a lot of big events, right? I mean, there's the election, there is first the vote on account and then there'll be the full-blown budget in July. Do you think in the run-up to these events, could the market build on to its gains or are we looking at some sort of volatility? And what's the big event that could continue to sort of provide that momentum to the market?
So momentum to the market is clearly being driven by liquidity, both global as well as local. And I was on the road meeting investors last week and distributors. And the question they are asking me is, what will bring the market down? Because they are seeing such inflows from their customers and clients that there is a good amount of local liquidity out there. Globally, as we just discussed, if we are building towards a rate cut in March in the US, then again we are talking about better liquidity. So liquidity support to the markets should continue, but we should not forget that that is because there is a slowdown. So that could create some volatility in the market. And of course, the lingering risk of the Red Sea issue, if it escalates and you do see some more disruptions in the trade channels, then that could lead to an inflation scare. So that's one more risk I would be watching.
Okay, all right. Hi, Meir. Good to have you in the studio and keep coming more often, right? If we're going to get fresh all-time highs, why not? But how do you approach, the banking theme? And in particular, I wanted to ask you about the PSU banking theme. Because for many years, maybe 5 years prior, maybe 2017 or prior period of that, you'd be saying PSU banks we don't want. Always there's a problem. They have been the biggest wealth creators in the last 18 months or so.
Absolutely.
Do you believe there's still more re-rating in store? And your preference at current reckoning? Because the private sector banks, they haven't really moved, particularly HDFC and Kotak. So how do you approach it?
So in my view, PSU banks structurally can do at best in line with the market.
Okay.
I mean the Nifty bank index, so to say. I don't see them structurally outperforming for a long period of time because the thesis of private sector gaining market share will continue because of better management or operational flexibility, whatever you call it. Having said that, in the last 12 months, the kind of move that we have seen, I would also consider it as a bit of a catch-up move because post-COVID, the private sector banks, especially the fast-growing private sector banks, retail-oriented, they went up by almost 2 to 3 times, and PSU banks probably went up by only 50 to 100%. So there was a large valuation gap that had got created, which is now corrected. So I would now rate both of them at par, and private sector banks will continue to grow a little faster, and stock price-wise also a little faster based on their earnings growth.
So you'll be leaning more towards private rather than PSU.
Absolutely. Because now I think it's time we start looking at the overall earnings growth. The valuation game is over.
Okay.
Amir, we got the budget coming up. It's a vote on account, right? So should we... By the way, the 2019 budget was a big one. The PM Kisan Yojana, etc., everything came through.
Absolutely.
It's still early, but not that early also, so we can maybe talk about it. Any expectations?
I would expect the capital expenditure growth to continue, especially when we are talking about railways, defense, roads. I think that thrust will, at least for FY25, will continue. I would expect some more extension or increase in amounts under schemes like PM Kisan, because there is rural stress. We are still talking about a K-shaped recovery. So that should continue. And I don't think the fact that it's a vote on account should make it not possible for the government to increase allocations, because it's an existing scheme. So you can always increase allocations to existing schemes. So politically also, I don't think that should be a problem. So some more support to the rural masses, continuation of capital expenditure, and I don't know whether they can do it in a vote on account, but some more tweaking of the income tax slabs for the middle class, so that consumption gets a little bit of a further boost.
Is there any takeaway from a stock-specific perspective there?
Not really, nothing disruptive. Yeah, one more thing that I think they could announce, again, it's an existing policy, is extension of the 15% tax rate for fresh investments, because that's, I think, lapsing the next few months.
Okay.
So that if you want to, do PLI and make in India, that 15% tax break extension should happen.
Okay, there's a pen and paper right there in front of you. Why don't you write down your expectation? And there's a ballot box as well. You can just slip it into that ballot box.
Definitely, I'll do that.
Yeah, when, as and when you're comfortable. But we hope Finance Minister listens to all of those requests.
Santa's wish list.
Yeah, Santa for the markets, right? But I wanted your thoughts. By the way, I just want to spot a couple of stocks. Indigo has hit a fresh 52-week high. Now, over the weekend, we've all seen, so much back and forth on what's happened with the delayed flights, etc. But one thing is for sure, that monopoly exists with Indigo, and UBS, in fact, this morning has hiked their target price to 3,700 rupees on Indigo. Big upside to the current market price. I wanted your thoughts here. This entire space, travel, tourism, within that religious tourism, right? Big events coming up as well. Do you think there's more to go, not just in Indigo, but in the likes of, say, something like an Indian hotels? Your thoughts?
I think that should continue, and Prime Minister himself has started encouraging more domestic tourism. So that's a clear sign that we need more domestic tourism. And I mean, there is shortage of infrastructure everywhere. So I think companies which will expand and invest will continue to, get a premium.
Last time we gave the clarion call for public sector enterprises and PSU banks.
And
we
then
don't know what happened, right? So we should pay attention.
Yeah.
Thanks very much, Meet. Great to have you with us here. We would have had a longer chat, but IT earnings are with us. So
Definitely.
Thank you. Thank you very much.
Always a pleasure. Thank you.
Well, HCL Tech is what we're talking about. Okay, I think we just wait 30 seconds and then we'll go across to, the HCL Tech management. Market is up 180 points or so. We've got about 22,076 at this point in time. So on the downside, it's 3:1, still in favor of advances, but HDFC Life, Zomato, Dixon, Ease My Trip, which had this breathless move higher, that's pulling back about 1.5%.
Anand Rathi as well.
Anand Rathi is lower. Electra, which I think was a big winner last couple of days, that I think is pulling back a little bit. There is Solar Industries with the 1,000 crore order which came through. Stock had a big move after that, 2.5% pullback. So small. Alchem is another one which is down about 1.25%, and so on and so forth. But well, HCL Tech reported a good set of third quarter earnings. They beat street expectations in both revenues and margins. My colleague Reema caught up with Prateek Agarwal, Chief Financial Officer, and Ramachandran Sundarajan, Chief People Officer at HCL Tech, and began by asking them on the quarter gone by. Listen in.
We had quite a sixer of a quarter, and it was led by three things to really distinguish. Number one was a solid outperformance by our software division, which clocked a solid 5% year-on-year growth. On a sequential basis, it appears as a 32% growth, but that's the seasonality, and 5% year-on-year is the right way to look at it, and that itself is a good number. The second one was, the mega deal that we had announced in the previous quarter, 10th of August to be precise, and that deal ramped up on schedule from 1st of November, and therefore contributed 2 months in this December quarter. And the third one was also similar, 2 months extra contribution by the ASAP acquisition, which we had done end of August, and which had contributed 1 month revenue to the previous quarter. And this quarter being the full 3 months was an extra 2 months. And apart from this, all the businesses continued. And ER&D, for instance, apart from the ASAP extra revenue, also grew 2.5% sequentially on an organic basis. So all in all these factors combined to the sixer of a quarter.
Well, that's nicely put, sixer of a quarter. Prateek, can you tell us the exact contribution of the Verizon deal and the ASAP acquisition to your top line this quarter?
So I would not want to talk about client-specific numbers for obvious reasons, client confidentiality. But suffice to say that it was obviously the major part of the growth in the services segment. On the ASAP, of course, it's a separate entity, and at the year end, when we publish the subsidiary results, you will see that it was extra 1% was the contribution. We did call out the 6%, total includes 1%, and therefore the organic sequential growth is 5%.
You have lowered your full year growth forecast to 5.5%, Prateek. Given the momentum, do you think you will be able to end the year at the upper end of the guidance?
So we actually called out the ask rate as well, like the cricket commentary goes. So the 1.6 to 3.5% in the services segments is what it takes for us to achieve the 5 to 5.5% growth at a company level. And that includes the confidence for that comes from three factors, apart from the overall business growth as well. And those three being Verizon was only 2 months in this quarter, December quarter, and March quarter will be full 3 months. So that would give 1 extra month of revenue from that. The second is, of course, the ER&D continues to do well. And the third is, in the December quarter, we did call out a significant amount of furloughs, which led to lower revenue. And that should not be there in the next quarter. It will be very small compared to the previous quarter, and that itself is a tailwind for us. So 1.6 to 3.5 in the services segment is what we are penciling in for the next quarter.
Fair enough. And your margin performance at 19.7%, there is an expansion in margins. Can you break up the margin line item for us? What led to the increase?
So we had a 130 basis points increase quarter on quarter. So 18.5% was the September quarter, and this quarter came in at 19.8. And the increase from PNP actually contributed 180 basis points, 1.8%. And the services actually went down sequentially by about 50 basis points. 65 basis points was just the increments that we gave to our the large chunk of our population this quarter. And we got, so that basically contributed to the 50 bips decline in this quarter. But over a period, of course, we'll make it up with the productivity that we normally do.
Sundarajan, the attrition continues to trend lower for the company at 12.8% in the current quarter. Will it continue to decline? Where do you think it could settle in the next couple of quarters? And can easing supply side be a big margin tailwind for the company even in FY25? For instance, earlier, the company's guidance used to peg the margins closer to 18 to 20%. That used to be the guidance. Then once this entire, hiring boom came in, the company lowered its margin guidance to 18 to 19%. Can we go back to, the earlier guidance levels of 18 to 20%? Is there visibility of achieving a 20% margin going ahead, say next year, given easing supply side situation?
So good morning, Reema. The 12.8% this quarter is the lowest in the last 7 years, if you exclude the FY21 lockdown period. So to that extent, this is the lowest attrition in many, many years. Sequentially as well, it's a drop of 140 bips, and year on year, it's almost a 900 bips drop. So this is a very good quarter. Looking ahead, if we are looking to see quarter on quarter growth, which is what we are seeing, there is going to be increased hiring activity in the market. So the demand supply situation is likely to move in a direction where there is more demand. So with keeping that in mind, it's very likely that the attrition levels will more or less stabilize at this current level. I would expect anywhere in the 12 to 14% range is where we expect it to stabilize, not really drop any further looking ahead to the way the demand is likely to be. So that's on the attrition story. The supply side, we still see increases in compensation. Although attrition has come down, hiring activity in the market has come down. But if you look at HCL Tech, we have bucked the trend. Over the last 2 quarters, we saw a negative net addition in terms of headcount. This quarter, it's a positive 3,600 net addition. And looking ahead for next quarter, if you look at the forecast for the services business, we expect a net headcount increase next quarter as well. So which means we expect to see increased recruiting activity, both in terms of fresher addition as well as lateral hiring. If that trend were to continue, the supply side easing that we are talking about will also start stabilizing, and the the skills in demand is also shifting, and the compensation levels for that is only tending to increase, not decrease. So that in itself is not likely to contribute to increasing profitability. We have to look at other efficiency measures and productivity for us to drive margin going forward.
Okay, that's HCL Tech, one of the biggest movers today, up almost about 4% and talking about the business. But let's slip into a quick break. Another big mover today is Tata Consumer. We have the MD and CEO Sunil D'Souza on the acquisitions that they've made of Capital Foods and Organic India. Stay tuned. Later, we'll put focus on what to expect from the pharma sector in Q3 in our special segment Quarter Se Quarter Tak. Stay tuned.
Co-presented by